If you're doing velocity banking with your credit cards, let's look at how you break down your budget, plan your paychecks, and which payments you'll pay to your credit cards. The first thing you want to do, and you should do this regardless of whether you're doing velocity banking or not, is put all of your expenses into a planner. You can plan on paper, but to me it's easier to see it in the planner because of the dates. So I do a monthly budget either on paper or in a spreadsheet, but then I also use the planner to budget each paycheck. Okay, so here we have all of her cash expenses listed in red. Remember, these are anything that cannot be paid with a credit card. They have to be paid through your bank account or with your debit card. We have their credit cards listed in purple. All of the other expenses that can be put back on the card are listed in green. And then we always write down the paydays, that way we can budget each paycheck. Now, after we've written everything out on the planner, we need to go through and find the statement dates for all of the credit cards. You can find your statement dates from looking at your last month's statement. Some statement dates are the same every month and others change by a day or two. Usually your credit card statement date is going to be anywhere from 3 to maybe 7 days after your credit card due date. So the TJ Maxx card, let's say it's around the 7th. So we circle it and put a little initial next to it. That way we know which card is closing that day. The Bank of America cards, they probably close somewhere around the 13th. So we do Bank of America times 2 there. Now Capital One, this is a Quicksilver card. That's one of those cards that the statement date will change from month to month. So it's July, there's 31 days in the month. This card's probably going to be closing on the 23rd. If it was a month that only had 30 days, like if we were in June, it would probably close on the 22nd. Chase, these stay the same, and the statement usually comes a lot faster than some of your other cards. So this statement date is probably the 20th. So again, we put the initial next to that. Discover cards, their statement dates come about 5 days after the due date. So 1, 2, 3, 4, 5. This first one is probably on the 26th. And then the second one is probably on the 27th. And SoFi, I don't have any of their cards, but let's say it's about the same, and that would also be on the 27th. And then Chase again is usually 3 days, so this card should always close around the 30th. Now we look at those statement dates and when the other bills are due to determine which bills we'll put back on each card. So the storage and the AT&T here are due like the 1st and the 3rd. So we don't have a card closing here, but if we look back, we have that Chase card that closes on the 30th. So I would use the Chase card for the bills at the beginning of the month. So remember, the Chase card is due at the end of the month, but we'll use it for the bills at the beginning of the month because of when the statement date is. So I had the storage, AT&T, food. If they're spending on food every 2 weeks, they would probably do $600 each time. Their food budget was $1,200. Gas, same thing. Their gas budget was $200. So if they're spending it every 2 weeks, that would be $100 each time. The cat litter here isn't due until the 11th. But again, the only credit card statement that we have closing is the TJ Maxx. So we probably won't put the cat litter on that, and we probably just won't use the TJ Maxx card. So you can see we have that listed here. We're not going to use it, so that balance should be steadily going down. Now the Bank of America cards are due on the 8th, but their statements probably don't close until after their next paycheck. So we can probably put the electric on those, or we could possibly just change the date of when the electric bill is due. Sometimes they'll let you extend it for a couple days with no extra fees. Same thing with the internet. If for some reason these cards didn't close until the 15th, you could probably just call and adjust the date that your internet payment is due. So anyway, we go through and we do this for the whole budget. Now planning our normal monthly bills is pretty easy because usually there's a set amount for those. What's hard about using your credit cards for velocity banking is your miscellaneous spending or things that don't have a set amount. So your food and your gas, and then the miscellaneous spending here. They have takeout 200, adult allowance 200, which actually those may be a little bit low. But again, this is why budgeting is so important, and keeping track of everything you spend is also very important. But these expenses here, one thing that's difficult about it is you can put it on multiple different cards. The other thing that's difficult about it is just sticking to the numbers that you have in the budget. So remember, I already said we accounted for the food and the gas here, and then I would probably put the second round of food and gas, if they're doing it every 2 weeks, either on the Bank of America card or the Quicksilver card. And I think for this example, I did put it on the Quicksilver card. So we have the Chase and the Quicksilver. So if you're doing every 2 weeks with things like that, your food and your gas, you're probably going to want to find one card at the beginning of the month that you'll use, and then one card towards the middle of the month that you'll use. But there are multiple different ways to do that, and if you're not just shopping every 2 weeks, maybe you want to find a card to put it on weekly. And that's just something that you have to plan for, but make sure that you're sticking to the amounts that you put in your budget. They have a $445 HOA fee. If this can't go on a credit card, it would just have to be considered a cash expense. And then they're paying $800 to their SoFi credit card to get it paid off because right now it has 0% interest. And they could put bills and spending back on this card if they wanted to, but you just have to make sure that the calculations are done correctly. That's actually going to get to the point where that statement balance is going to be paid off faster if they're putting bills back on it. But for now, I just left it as they're not. So anyway, that's how we go through and look at the statement dates. Like here, the Bank of America card closes, so we could use it for the electric or the internet. Then the Quicksilver card closes here. There's not really anything due, which was, I think, why I put the food and the gas onto that card. Now let's look at how we would plan each paycheck. And remember, you can also use the Velocity credit card cash flow planner to help you plan some of these things. The spreadsheet is super helpful. So they get paychecks on June 27th and June 30th. This is the total for those paychecks. We have the mortgage, the SoFi, and the car loan that have to come out of these paychecks first before we pay anything else. And we could start this in June if we wanted to, but it's probably easier to start fresh at the beginning of the month, or in this case, at the very end of the month. So we have those cash expenses here, the mortgage, the SoFi, and the car loan. Those are coming out first. I would try to get these out of your account as soon as you get paid. That makes it a lot easier to pay everything else to the credit cards because you know all of these bills are accounted for here. So after those cash expenses, we have $2,290. And remember, these are the paychecks at the end of the month. So at the end of June, this HOA fee is due. I would probably just consider it a cash expense that first time. And then at the end of July, when it's due again, we can put it back on a credit card after we pay the card enough to have it go back on there. If we're considering that a cash expense, we have $1,845 that we can pay to these credit cards here. Remember, we already planned how much spending we're going to do back on each card, so it should be pretty easy to calculate the payments, but we can't forget that we need to add interest on top of these amounts. So June 27th and the 30th, the first card we're gonna have due is that Chase card that's due at the very end of the month. So we need to at least pay $1,095 plus probably about $120 for the interest. So we need to pay $1,215. The TJ Maxx card, we weren't going to use it, so let's come back to that after we figure out the Bank of America cards here. So the Bank of America card, I had $100 of the miscellaneous spending going on there and the electric bill. So $238 plus $110 is $348. So we're paying $348 to the Bank of America card there. And then the second Bank of America card, I did not have the food and gas on there. I had it down here on the Quicksilver, but again, you can play with the numbers. So we had part of the miscellaneous spending and the internet. So we need to pay $220 plus $135. So we need to pay $355 to that second Bank of America card. And remember, these numbers are only accounting for the bills and the interest. So the balances won't go down if we're only paying these amounts here. So we have $1,845 available that we paid to these cards. Let's see where we're at. $1,215, $348, and $355. So we're going to be short. Now remember, with these two Bank of America cards here, that statement probably doesn't close until after the paycheck on July 11th. So what we can do is we could pay the minimum on these and then pay more the second paycheck, or we could just pay one and pay the minimum on the other and then add more that second paycheck. But there are multiple different ways to do this. But make sure you're looking, if you have a card due and you feel like you're short, see when the statement date closes compared to when your next paycheck is. So let's see, we were at $1,215, and they have plenty of money left over that all of their card balances should be going down. So it's just really planning the paycheck. So let's see, we had $1,845 minus $1,215 minus $348. So that first card fits on there just fine. Let's see what the minimum is on the second one. Is $177. So let's say we pay the minimum on that one. So we still have $105 left. So we could pay the Chase card here, we could pay this Bank of America card here, and then the minimum on this one, which is gonna lower that payment amount that we need to make when we get the paycheck on July 11th. And then we could pay an additional $50-ish to each card here to have those balances go down some. Then when we get the next paycheck, again, we take out the cash expenses first. So we have a loan, savings of $200, and a Klarna payment. Klarna payment isn't due until the 26th, but again, I would try to pay that early with this paycheck here because the paychecks at the end of the month are used for the big cash expenses in the beginning of the month. So if we can just knock this one out with our paycheck in the middle of the month, that's probably better because this paycheck, we have a lot of extra money to play with the credit cards. So that's why I put the Klarna on that paycheck. So we have $3,171 that we can pay to these cards here. Remember, with the Bank of America card, we needed to pay $355 and we already paid $177. So we need to pay $178 on it still up here at the top. And again, that's just the minimum to cover the bills and the interest. So the Amazon card here, we need to pay $308 plus $75 for the interest. So $383. The Quicksilver, that's what we were using for the food and the gas. We need to pay $700 to it. Now their Quicksilver balance, I don't even think right now is $700. So they would just pay off the card completely for now. And then if they're using this card for food and gas, they would just pay this card off every month. So there should be no interest actually at all on this card after that first month when they go in and pay it off. The limit on this card was also $750, so that would stop them from overspending quite a bit on their food and gas because they're going to be stopped by their limit of $750. And remember, we were only supposed to be using $700. So if they get to the limit of $750, they've been overspending somewhere or they didn't plan the cards correctly. Now we look at the Chase card. We have nothing going back on it. That limit is also very low, so hopefully they can pay that card off soon and there will be no interest on that card. The Discover, if the HOA can be put back on it, that would be $445 plus the interest of $210. So we need to pay $655 to the Discover card. The other Discover card here, remember we had miscellaneous spending here and here. That was their out to eat, their adult allowance, and their subscriptions. And the subscriptions you really should write in the planner to plan which card is best for them to go on, but usually those payments are pretty small, so it shouldn't make too much of a difference, but again, it does need to be calculated. So we had $250 going on the Discover, and then again, we had nothing going back on the SoFi, but they were already making an $800 payment because they want to pay that off quickly. So we have $250, and then they're $800, and they're not using this card, so that balance should go down. So we have $155 left that we can pay down the additional balances. Now they're actually going to have a lot more than this normally, but what happened was we paid the HOA fee here as a cash expense. Then over here, we had the HOA fee going back on the Discover card. So technically it's like we paid that twice this month just to get to the point where we can put it on the card. So after July, when that gets put on the card, this will no longer be a cash expense at the end of the month and will free up more money during this paycheck that we can pay to the cards here. I hope that makes sense. The first month is a little confusing for this reason. So with the extra here, we can split that up across multiple cards, or we can pay it to two like we did over here, or maybe you just want to focus on one of them. And remember, this card had no interest, so it's actually going to be going down $800 per month. So it should be paid off very fast. But this is how it looks to plan each paycheck. Again, that first month is confusing. The second month, we would have had plenty of money to pay all three of these cards here and pay extra to them. And then it seems like $155 left in that second paycheck isn't a lot, but remember, they're already paying an extra $800 to their SoFi credit card there too. And you know what, I actually forgot because we weren't using these two cards here, the TJ Maxx and this Chase card. Both of those have very low balances. This minimum payment was around $40 and this minimum payment I believe was $40 as well. So with those cards, I would just pay the $40 to them. So maybe we don't have this extra $50 going to the Bank of America card. It would go to the TJ Maxx card instead. And then you don't touch those cards for anything if those are the cards you're not using. But anyway, it is a little bit difficult that first month to figure it out for the reasons that you just saw. And if it's intimidating to do all of this, try just using one card for one or two bills. The worst part about this is planning it all out. But once you get used to it, then you know automatically which bills you're going to put on each card. So you don't have to plan it out quite as much. You do have to do that more in the beginning until you get the hang of it. If you don't do it perfectly for the first couple months, it's okay. It's really not the easiest thing to do, especially if you're just trying to jump in and do it all at once. Just at least make sure you're making all the minimums for your credit card so that you don't get any late charges. But this is how you need to go in and look at each paycheck. And if your paychecks aren't the same day every month, that's why it's super important to go in and budget each paycheck like this. Because how you pay the loans might change, or when you put up the savings might change, depending on when your pay dates are. But remember, when you get paid, try to get those cash expenses out of your account as soon as possible. Then everything else goes to the credit cards. And remember, you have to plan what you're going to put back on each one of your credit cards. That's super important. If you're doing this and you know you have money left over at the end of the month and your balances are not going down, you're still overspending and you need to look at that. But anyway, this is how you plan it. And if you have any questions about Velocity Banking, credit cards, credit scores, or anything else, let me know.